Good afternoon. You're watching Market View. I am Sifiso Ngumalo, and here's what's making headlines in the world of money today. The Eswatini Stock Exchange has just dropped its July month-end report, and on paper, the numbers look very, very calm. Market capitalization is holding firm at just over 6.6 billion emalangeni. That is between the month of June and July. No trades, no corporate moves, just flatline. But when you zoom out, and a very different story starts to emerge. Year on year, the market has shaved off more than 3%, slipping from the 6.9 billion emalangeni that was recorded this time last year. Is this a red flag or market stability, or simply a correction in a cautious investment climate? Our economist, Sanela Sibia, is standing by to decode what today's numbers mean for your portfolio and where the smart money is headed next. That is what is going to be happening on the show today in our discussion segment. But first, our business news. It seems we're talking big money today on the show. The Food and Agriculture Organization is investing over 15 million emalangeni in various development projects across the country. It is aimed at boosting food security, supporting farmers, as well as strengthening agricultural value chains. This was revealed by the country representative Howard Mbuyisa during briefing, where he outlined that the projects have been running since last year until 2027.
Part of the programs that we have pledged last year are now commitments which are ongoing. They have been launched by the Minister for Agriculture, and that include continued support for the Eswatini Agriculture Development Fund, support for the establishment and operationalization of the agriculture industry associations, and then we have also support for remapping the agroecological zones in the country. We are also supporting building resilience and climate change improvement in terms of coordination in the country. So that is the ongoing support. All these interventions that are ongoing amount to $820,000 US, and they'll be running between now and 2027.
On another note, the Director of Small and Medium Enterprises, Mluleki Dlamini, has noted that farmers still do not use the small-scale export guarantee scheme.
We see more of the funds not being used by the business community, and we wanted to understand what are the challenges that they are facing. So today the discussion was around that, and we are hoping that we will be able to get those solutions out of that challenge they are facing today. Mainly it was the small-scale enterprise loan guarantee scheme that we saw that the uptake was not impressive, and we just want to say to the businesses, we want to understand what were the challenges or the challenges that they're facing.
The executive director of CADESA says they have developed technologies which can be accessed and used by farmers to boost production and trade.
CADESA, through its various projects, has now managed to have 314 technologies and management practices distributed to member states through the ICKM focal points. Those focal points are the people that are responsible for then taking information from CADESA, knowledge from CADESA, and then disseminating it in country.
According to the Minister for Agriculture, Honorable Mandla Chawuka, currently the ministry needs over 9 billion emalangeni to boost production and increase exports. Reporting, Nalswendla Ngamandla, Vuminkosi Nzinisa Mbabane.
Well, now to a story that has surely sparked a lot of discourse and will for sure be the going notion of controversy for some time. The Eswatini National Provident Fund bill, which is allowing for a spouse to receive a pension, something that was stated by the General Manager Operations Mika Ngabinde during a workshop with the Editors Forum. He clarified that the conversion of the ENPF into a pension fund is not intended to leave the nation worse off. Here's a report.
It is going to reduce poverty at retirement. Members are going to be assured of income until they pass on, addressing therefore the poverty that they would experience otherwise had this fund not been converted. it is also moving from consumption to savings, leading to a larger asset pool, which reduces unit costs in terms of the administration of the fund itself. Kusho ukuthini ke lokho? Lokho kusho ukuthi if we are not going to be withdrawing the whole amount when time for me to be paid a benefit comes, it means whatever balance that is going to remain with the fund, it is saying the fund is going to continue to have cash that will continue to be invested for my own benefit, as opposed to us as members that are qualifying to withdraw everything. And this, therefore, is improving the situation, the financial viability, and the investment base of the fund. Now, iphinde futhi ama benefits lakhona kuma members. The pension fund, ithi, protector now the vulnerable, in the sense that widows currently under the Provident Fund receive a lump sum and they're out of the picture. Remember, the breadwinner is gone now, and he passes on. The Provident Fund pays a lump sum to the widow, and 2 months down the line, iphelile le mali. The pension fund is saying now, as proposed by the bill, the widows are going to receive a spouse pension. Naye, loyal spouse, is going to receive the pension until aze ahambe emhlabeni, which is something that is non-existent under the Provident Fund because we pay a lump sum. So that is another benefit that is coming. Now, if you look at the way the bill has been structured, it is saying we have occupational pension schemes, that is the employer-based schemes. And the bill is saying, proposing that those schemes, the employer-based schemes, should not be done away with. They should continue to play the role of a top-up on the basic pension that is going to be provided by the National Pension Fund.
All right, that is how we end our business news. More on the show after the break.
Hi, I'm Golda. I work here at the IMF. Our aim is to provide the best possible advice on economic policy to our member countries, helping them to create conditions so everyone prospers from economic growth. One question our economists are always getting: how can we reduce poverty and foster inclusive growth? There are a few ways to think about it. Some say the government should be heavily involved in the economy, with regulations to keep people safe and high taxes that fund and support a healthy, well-educated and inclusive society, even if it's at the expense of higher growth. Others believe that the government should have little or no part to play in the economy. Lower taxation means more money in everyone's pockets. More individual freedom, they say, means more economic growth overall. But maybe there's a target we all could be shooting for: the best policies on inclusion and growth. Essentially, inclusive growth is about making the economic pie bigger and sharing those slices more widely. So, how do we get there? By aiming for a middle ground. Both sides mostly recognize the need for social safety nets, public pensions, unemployment insurance, food programs. These measures prevent extreme poverty and provide a basic standard of living. At the IMF, inclusive growth is central to our work because reducing poverty is in everyone's interest. Part of having a free and equitable society is ensuring we all benefit from its growth, no matter who we are. And it's not just about creating a fair and equal chance to succeed for individuals, regions, or countries. It's about distributing growth fairly for future generations too. Overall, inclusive growth is based on the idea that wealth creation, economic freedom, and equal opportunity can and should coexist.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
Welcome back. Let's discuss now the Eswatini Stock Exchange, which is released its July month-end report, and it states that the local equity market capitalization held steady at over 6.6 billion Malangeni. This is between the end of June and July this year, and there was no chance because no trades or corporate actions impacted share prices during this period. However, compared to last year, the market capitalization dropped by over 3%, falling from approximately 6.9 billion in July 2024 to over 6.6 billion in July this year. We want to understand what this decline suggests about the stability of the markets with Sandalis Bia, who is here in studio now to help us decode these numbers. Good afternoon. Thank you so much for coming to the show. Let's understand what this tells us, because on the surface, the market looks like it's stable, particularly when we look month to month. But that 3% yearly dip is what is catching a lot of people's attention. What does it really tell us about the current appetite for equities in Eswatini?
Thank you, Mr. Nxumalo. So, like you're rightly putting it, that when you look into in terms of the market capitalization year on year, it shows that there's been a bit of declines. But what this to me signals is the fact that, number one, we know that Eswatini is what you call your dividend investor destination. We're not seeing much trade, so that's the issue. The shares don't change hands. The person just buys them and then they keep them and then they just wait for the dividends year on year. So right now what we've seen is a couple of companies, showing some downward movements in their share price action. That be your Inala Capital and your Swaprop Limited and I think your Greystone Limited, Partners Limited. So those downward trends in those share prices have actually just now overall led to the markets shrinking in terms of the capitalization, because you'd understand that when we calculate capitalization, we simply take the value of shares multiplied by the prices. So this downward price action on those three companies, and it's not unexpected, because these are companies that what you'd call your venture capitalists, people who just mobilize funds to invest them somewhere, be it in property and be it in international markets. Now with what we're seeing happening in terms of the global financial markets, and then we do expect this. And if you recall that coming through from June, or from April, May, June, July, we were dealing with those issues around what you would call Liberation Day, those Trump tariffs as they came into effect. So that's why we're seeing those things happening. But overall, what it speaks to is the fact that Eswatini is a dividend investor, and some of those investors divested from Inala Capital, they divested from Swaprop Empowerment Limited, and some divested from Greystone Partners Limited.
So are you saying it's not necessarily something that investors should be particularly worried about? It's just a reflection of global trends?
Particularly, we should be worried about the prowess of our capital markets, because that's what it speaks to, the prowess of our capital markets, the ability of our capital markets, to attract more investors, beyond your institutional investors. How do we get to the pockets of people? And how do we get investors from outside Eswatini to come into the play? Because that contributes to the picture that we are seeing. And then overall, it does speak to the global economic environment. And we've all, for the most time, thought Eswatini was somehow immune from that, but these share price movements are showing us that we are not as immune as we thought we were, because we were a dividend investor destination. Yeah.
So we're seeing very little trade activity, right? And then almost no corporate actions on the exchange. And that's a very interesting observation, because it could pose the question, does this speak to the investor fatigue, so to speak, or there are deeper structural issues in the market?
For me, when it comes to our capital markets, Mr. Nxumalo, it's more structural than it is, investor fatigue and whatnot.
Sure.
It's an issue to say, for example, if you would look at the companies that we have listed, if you look at who the shareholders that have actually bought those Nedbank shares are, and then you go to your RES, then you go to your SL, you will realize that it's only a few institutional investors. I'm not sure, we yet to do the study and to see if we do have individual investors that go into the markets to buy those shares. But I remember back in the day, there was a study that revealed that because of the 30% liquidity requirements that banks and other institutional investors must actually keep in the local economy, they are the ones who buy those shares, and they are the ones who buy those bonds. So when they're not doing anything, the exchange just becomes stagnant like that.
Yeah.
So what we need to work towards is to get you and myself to be able to invest in the Eswatini stock market. And what you need to do there, Mr. Nxumalo, is you need to make it so that it is easy for me to purchase shares and sell shares within that. And automation is one of those things that we're looking out for.
All right, I like this graphic because it really does, they just removed it, but it really just shows that the market cap has been steady month on month. But there seems to be a marginal, I'm not too sure whether it's marginal or significant. I wasn't really, able to really tell the number. Oh, there it is with RES. Okay, it seems as though it's a marginal increase there.
Yeah.
It's as if RES has been the only entity that has been able to have somewhat of an increase compared from last year to this year. I wonder what is it that they are doing that everyone else is not?
They are basically an entity that is tradable. It's guaranteed of the profits. It's one of those that we all want to go into. Right. So whenever there is a bid of, available shares, you are going to find someone who's going to pick those shares up.
So are we interpreting this as a sign that the exchange is resilient, even if it's somewhat, it is asleep, so to speak?
Yeah, resilience is part of the story. This is a bit of stability that shows that, yes, Eswatini Stock Exchange is a stable stock exchange. But what we need to worry about is, why are we not seeing that share price action, that share price movement? And that is precisely what we are worried about. That's what we need to push us up to ensure that people are able to mobilize funds. Because what this means is, if I came into the market and wanted to mobilize funds, what are the chances that I'd be able to mobilize those funds?
It's an interesting picture indeed. So I suppose the prospects are there. It's just, the structural issues are really hampering that whatever catalyzation, if I may use that word. Yeah. What catalysts would you say are needed, really, if we're being specific now, to inject life back into the equity market? Is it about policy reforms? Because there's that conversation. Is it new listings? Is it, or perhaps more aggressive investor education?
It's twofold. The first part of it is you need investor education. Like I said, if I were to walk out in the studio and ask the people sitting there, if they have shares in the stock markets, the answer you might get is a no, purely because it's more a manual process. So we do expect to see a bit of automation so that it is easy even for a person in the UK, in Taiwan, wherever, to buy shares and invest in the local stock exchange. And we also need to be able to shift and move those, to be able to attract international companies to come and lay out and mobilize funds in Eswatini. So what that means is we need to change our financial, our capital market framework a bit so that we are a bit amenable to that. And another issue that we're seeing that we are not addressing as a country is the fact that a huge proportion of the companies in this kingdom are small, medium enterprises. And if you want to see a bit of activity there, you need to open that up. And we've seen quite beautiful, quite beautiful stories coming out of Botswana in terms of how they are able to get the SMEs to list on the Botswana Stock Exchange and be able to trade those shares. So you get to see a lot of that. So we need to move beyond that, because when you look at the big corporations that we have in Eswatini, they are not domestic companies.
It's quite interesting because I haven't had much conversation or rather, development talk around automation in this particular conversation. I also haven't had much conversation around restructuring the frameworks that exist. So I'm not too hopeful about the future, but hopefully when they listen to this conversation, they can heed to that. But when we look ahead now, we look at the rest of the year, because this has been, June, July, I believe. What kind of, what projection should we expect? Upward, downward movement? Should we realistically expect on the Eswatini Stock Exchange?
I would expect no changes. It should stay at all quite...
so resilience?
It's not resilience per se. I think I'd call it sleeping.
Asleep?
Yeah. Purely because if you look at the trends, Mr. Nxumalo, you and I track these numbers on a daily basis.
Right.
We've seen Nedbank posting beautiful profits. Markets didn't move. So that means Nedbank was oversubscribed. So you're not going to see any price action there until and unless a person who holds shares in Nedbank decides to sell them, right? We're only seeing a bit of movement in terms of like the one you just noted, Royal Eswatini Sugar Corporation Limited. So that means there we probably had a willing seller and a willing buyer. And the price was a bit elevated, and we are seeing that coming into play in today's numbers. Because when you now look at the all shares index, you can see that it has moved from 478.32 to 483 or thereabout.
Right.
Yeah. So that's why I'm just seeing some relative docility within this.
So investor education, automation, restructuring of frameworks, all of that has to happen simultaneously if we really want to see a spike in everything that we have just discussed. From this to our market analysis. You're watching Market View, the Monday edition. We get into our market analysis now, and Mr. Sibia takes center stage without any interruption. Mr. Sibia.
Thank you, Mr. Nxumalo. So when you look at the stock markets, what we are seeing moving markets in today's session is the fact that we're coming out from that Russia-Ukraine meeting, the meeting where Ukraine was not part of that meeting. So that's what's largely moving markets in Europe, and also when you go into Asia as well. But we're seeing a bit of correction coming through from that price action movement that we saw last week, given those beautiful numbers. So when those are beautiful, what you call them, earnings numbers. So when you come into the US, what we're seeing there is, a bit of a downward movement across all the markets. Again, that was just a correction of those, because whatever goes up must eventually come down. But markets are just watching to see what's going to happen then. So we're seeing the Nasdaq there just losing some 87 points, and the Dow Jones Industrial gaining some 34 points. But we are looking at the futures, and they seem to be a bit muted as we go into today's trade on opening bells at 3 o'clock. And then when you come into Europe, what we're seeing there is a bit of a correction and a bit of a scare, Mr. Ngumalo, there, because what has actually been moving Europe in the past couple of months has been those defense stocks. So right now, with what's happening in the peace talks with either Europeans being kept on the sidelines, and also the signals coming out from we've seen President Trump telling the world that President Zelensky can end the war today if he wanted. So we're back to that level where we're seeing President Trump siding more with President Putin, and so that now just brings a bit of uncertainty in markets in terms of when we are going to end the war. So that's what Europe is reacting to. But we are hopeful that after today's meeting, those defense stocks will begin to surge again. And then when you come into those to the Asian markets, again, it's a bit of a relaxed and a mixed mood there. We're seeing something interesting happening. The Nikkei is now beginning to hit all-time highs post-COVID. So that means there is quite, interesting, investor confidence in the Asia region. And same thing we've seen Japan, closing at very good. Again, we are back on all-time highs within the Japanese economy. So now, again, that's given the dimensions that we are seeing within the East Asian economies, where there is a lot of stimulus that is going into the economy. We've also seen India pumping some stimulus just to counter the effects of the tariffs. And then when you come into South Africa, we're seeing again a bit of, just a pullback, just a bit of a correction following those earnings that we saw last week. And also there's a bit of another uncertainty now that is brought about by the fact that the peace talks are not going the way the world wanted them to go. We've already discussed that in the local stock markets, we've seen a bit of an increase, some 1.4 percentage change, and that's largely driven by the Royal Eswatini Sugar Corporation, that change that we've seen there. And then coming into commodities, we're seeing that gold has actually just gained a bit because uncertainty is coming back into the markets because of those peace talks. And then Brent crude oil relatively flat at that 65 as we've been predicting, but we are waiting to see what signals are going to come from today's meeting and what it would mean for global demand, and we might likely see some positive or negative changes in there. And then in terms of the currencies, Mr. Ngumalo, we are relatively stronger against the dollar and a bit stronger against the euro, a weaker against the dollar, and again stronger against the Japanese yen. So that's now, given the price action that we're seeing across the globe, now it's coming into play. The fact that we're seeing this uncertainty and we're not sure when the end to the Russia-Ukraine war will ever come and what that means, whether we're going to see those additional tariffs that President Trump has been talking about, not tariffs per se, sanctions on Russia. Yeah, so there's just quite a lot of moving elements, and we're seeing a bit of a dip in terms of the lilangeni against the dollar. But we're seeing a bit of strength against the euro because of the uncertainty that's brought about by these peace talks. Europe is not in a very good footing. And, same thing, we're seeing a bit of strength against the Japanese yen.
Of course, I realize the peace talks are what is holding most ground in the markets today. And it makes me wonder, because Trump has said 9 hours ago that, Zelensky can end the war if they can just forget about Crimea, or however that is pronounced, I always butcher it, as well as forgetting ever joining NATO. So I wonder, are we supposed to be confident at all that Zelensky can sort of concede to that accession or not?
He's already said that the constitution doesn't allow him to cede territory to Russia. So
going into the meeting, what are we doing?
trying to find, it talks about talks, trying to find a solution. Eventually, there must be a solution. And in wars, I may not be a political scholar, but you can't go into a war and expect to come out the same way you did going in, right?
But I suppose as it stands right now, no one is the same already.
Yeah.
So it makes me wonder and very jittery looking at what is to happen in that meeting in particular. And yeah, it's all about the aesthetics.
Yeah, so that's actually what the markets are feeling right now, the feelings you're feeling. So it's a bit of uncertainty coming.
Market View, the Monday edition. Thank you for staying with us. See you again tomorrow. Bye-bye.